Okay, guys, our next standard will be IND AS 7, which is your cash flow statement. Okay, sir, hurry, shut up now. IND AS 7 cash flow statement, or rather statement of cash flows. This module 4, this is your first chapter, sir. Actually speaking, you people are already pro in cash flow statement kabatti. You are not pro, huh? Pros. The couple ayyara sir meeru. Okay, listen. Sir, accounts it was there, FM it was there. So somewhere you would have covered cash flow statement. Since conceptually you are very strong in cash flow statement, I wantedly kept this chapter towards the end, sir. Sir, are you stronger? Choice to this, sir. Ayo. Anyway, what is given there in the text we will read later on. But normally you tell me, what do you remember in cash flow statement? Sir, listen. You will categorize all the activities into 3 headings. One is cash flow from operating activities. Next, cash flows from investing activities. Number 3, cash flow from financing activities. Official definitions of this we will see later on, but casually speaking, operating activities means these are all inflows and outflows relating to principal revenue generating activities. Ante sir, any entity will be formed for some core purpose, no? Purpose related cash flows, inflows, outflows, everything are cash flows from operating activities. Even lead activities and all are also covered in that. But the operating activities, one more story is there. What it says is, if any cash flow cannot be categorized as investing or financing, that also will be grouped under operating. Operating activities ante whatever are our core operations, operation ki related activities, they are all cash flows from operating activities. Not only that, any cash flow which cannot be included as investing or financing, that will be naturally included in operating. So operating is not only on its own, it's a balancing figure also. If anybody else is not willing to take any item, operating activities will go and group it off. Okay, remember this. Coming to investing activities, this is basically about acquisition and disposal of assets. It can be PP, investment property, normal investments, all such assets. And PP, intangible assets, investments, all these are covered. Next, cash flows from financing activity. Financing activities means they are about raising and repayment of funds, which means either equity issues, equity redemptions, or borrowing issued, borrowing repayments, and related items, ante interest and dividend payments. Interest and dividend incomes are related to investing activities, because investments, whatever you are getting, they are obviously investing activities. Liability side lo, whatever you have, on that if you pay anything, that will be financing activities. So basic meaning of operating, investing, financing. Okay, now coming to the presentation of cash flow statement, how we used to have is, first we used to write cash flow from operating activities. This cash flow from operating activities ki basically 2 methods are there. One is direct method and indirect method. Indirect method lo sir, what we used to do is, we used to take the profit before tax of the company. Our profit lo whatever non-operating plus or minus, similarly non-cash items you adjust, then you will get one number. To that you will do something called as changes in working capital. So some plus or minus will come. Here one final answer will be there. I extraordinary now India, it's not there, no, so I'm not telling you that. From this finally you remove tax. The final answer whatever you get, this we call it as cash flow from operating activities, or net cash generated, net cash expended in operating activities. So basically your starting point is P&L account lo profit. Profit ultimately operating cash flow you have to convert, sir. And most popularly 95% of the sums what you would have done, would have been based on indirect method. Examiner generally direct method exam will not come or did not come in your IPCC. Between these two, why many questions are framed only on indirect method is, indirect method lo what is the starting point, sir? Profit. Profit normal ga P&L account lo whatever PBT is visible, profit. So taking P&L ka profit, you are working out cash profit from operating activities. So it's a kind of a reconciliation also. And moreover, SEBI requirement law also they asked only indirect method. So most of their questions in your basic level were only on indirect method. But this standard IND AS 7, in the standard itself it says that it's more preferable to apply direct method. In direct method, how will we do? Direct method lo life is very easy, guys, here. Idantha inflow outflow model. That means sale of goods inflow, purchases of goods outflow, receipt from customers or debtors inflow, payment to suppliers outflow, expenses, operating expenses you pay, taxes you pay, like that. Directly inflow outflow model you get it. This is direct method. Moral of the story, whether you apply this method or this method, the answer should be same. You get different answers, marks also will be definitely different. So answers cannot be different, sir. Both the methods should give you same answer. There is a question, sir. A question he will ask you both to do direct also, indirect also. If somehow you have to make sure that the answers match. Okay, so it's about cash flow from operating activities. Final presentation. Sir, issues are there. We will discuss one by one. Okay, rough idea I am giving you so that while discussing you will understand which point, what impacts it will have. One more thing. Working capital adjustments are there, no sir? This one? Okay, let's talk on that first. Sir, in your P&L account, here PBT is there, sir. Suppose 1 lakh PBT is there. Here depreciation is there. Interest expense is there. Dividend income is there. Idoka 5,000, idoka 20,000, idoka 3,000. Suppose I took PBT as my starting point, 1 lakh. I want cash flow from operating activities. Assume that other than this there are no adjustments. Then what all items you have to do is, in arriving at 1 lakh, did you already deduct depreciation? Yes. But to the extent of depreciation, is there any cash outflow? No. Since there is no cash outflow, wrongly deducted, you go and add back to the extent of 20,000. Interest expense. There is a booking of 5,000 expense. I don't care whether it is paid or not now. Whether it is paid or not paid, I still have to eliminate this from my PBT. Reason, that is a financing activity. My goal is only operating. So, interest expense 5,000 add back. Sir, E 5,000 where should I show, sir? E 5,000 whether you will show or not I don't know, but whatever interest is paid, that you have to show it under financing activities. You might have paid 5,000, you might not have paid 5,000. Why am I saying might have paid? Because interest expense is something which is measured using EIR. Your contractual cash flow might be something else. What is cash flow? That only will come, no sir. Financing activities flow, not whatever you booked. So, if 5,000, here we add back. Don't think that if we add back 5,000 here, somewhere we have to minus again 5,000 only. Not like that. Whatever is paid, that you remove in financing activities. Okay, that's about interest. Next, what about dividend? Dividend income is on the credit side of the P&L. That means 1 lakh 3,000 is already included. But income from investment is a investing activity. So operating activities, it should not be there. So you also remove dividend income here. Whatever answer you get, you get. Are you understanding? This is easy only, no sir? Now answer me this. Questions, no sir, they will give you previous year data, current year data. In this, that fellow will tell you, last year stock 60,000, current year stock 80,000. Then he tells you, last year debtors 50,000, this year debtors 35,000. Then creditors, last year 40,000, this year 44,000. They will ask you to do working capital changes for this. Working capital changes means you take PBT, you plus or minus all non-cash items, because they're non-cash, my goal is cash, plus or minus non-operating, అంటే ఇన్వెస్టింగ్ ఫైనాన్సింగ్ యాక్టివిటీస్ అంటే ఎలిమినేట్ చేసేసాను సార్, బికాస్ మై గోల్ ఈజ్ క్యాష్ ఫ్లో ఓన్లీ, బట్ ఆపరేటింగ్ యాక్టివిటీస్ కాబట్టి నాన్ ఆపరేటింగ్ యూ రిమూవ్, నాన్ క్యాష్ ఆల్సో యూ రిమూవ్. Ideally, once I remove these two, ఈ రిమైనింగ్ నంబర్ వాట్ ఎవర్ ఐ గెట్ నో సార్, ఇది పక్కా ప్యూర్ ఆపరేటింగ్ యాక్టివిటీ, దేర్ ఇస్ నో డౌట్ ఆన్ దట్. వై? ఆల్రెడీ నాన్ క్యాష్ యూ ఎలిమినేటెడ్, నాన్ ఆపరేటింగ్ ఆల్సో యూ ఎలిమినేటెడ్. మరి నెంబర్ ఈజ్ వాట్ దెన్? దిస్ ఈజ్ ఇన్ ద ఫార్మాట్ వాట్ యూ స్టడీడ్ ఇన్ ఐపీసీసీ. ఈ నంబర్ ఈజ్ కాల్డ్ as ప్రాఫిట్ ఫ్రమ్ ఆపరేషన్స్. అదొక నేమ్, దట్స్ నాట్ క్యాష్ ఫ్లో, ఇట్స్ కాల్డ్ as ప్రాఫిట్ ఫ్రమ్ ఆపరేషన్స్. From to this you will be asked to do working capital adjustments. Once you do this, the resulting answer will be there, no? This we call it as cash flow from operating activities before tax. From that tax you remove, final answer is cash flow from operating activities. It is our presentation. The point is, why these things have to be done? Put non-cash and sir, I know depreciation, outflow not there, but profit low we removed it, so we add back. Interest expense is there, you might have paid it, cash flow A, but that's not operating, added back. Dividend received A, but not operating, removed it. But why working capital adjustments? Reason. This is the reason, sir. Why if I do this only, then only answer is correct answer. Why should I do working capital adjustments? Point number one. Second thing, how will you do? Okay, why later on we'll see. First, how you tell me? Because you know this. Increase in stock compared to last year, current year. From 60 it became 80, sir. 20,000 change is there. Outflow no inflow no? Simple answer. Outflow. 20,000. Sure. Okay, correct answer. Next, debtors decreased. Decrease in debtors. How much is that? 15,000. Right. Next, creditors low. Increase is there. Inflow no? Outflow no? Sure. Correct only? Okay. 4,000. Okay, chalo sir. Answers are correct. Tell me reason. Increase in stock aite, why minus 20,000? Stock you might have purchased. Okay. Debtors decreased. Creditors increased. Not paid, it should be 40,000, no? If creditors are not paid, it should stay at 40,000. It increased, no? Answer? Okay, but stock increase you already considered it as outflow, no? Good. Listen, I can say stock increase, no? That's because of sales returns. Possible? How is it an inflow then? You sold. How is it an outflow then? You told that stock increased because you purchased stock. I'm telling you, year nothing happened, sir. I did not buy one unit also. I did not sell one unit also. Last year, whatever I sold, that fellow came and returned it to me. Sales returns. No. Answer 20,000 I will not deny. Pakka correct and minus a correct. I'm not asking you that. I'm saying that don't think that this is outflow. అంటే లాజిక్ ఇస్ అంటే యూ రిమెంబర్ ఇన్ వన్ వేనో, ఆ రిమెంబరింగ్ ఇస్ ఓకే, యూ రిమెంబర్ దాట్, బట్ దట్స్ నాట్ ద కరెక్ట్ రీజన్. ఐ మీన్ టు సే 60 నుంచి 80 ఏంటంటే డోంట్ థింక్ దట్ యూ పర్చేజ్ ఇట్ స్టాక్. పర్చేజ్ స్టాక్ ఆల్సో ఈజ్ రీజన్. సో మెనీ అదర్ రీజన్స్ ఆల్సో దర్. సపోజ్ సార్ 60 ఇన్స్టెడ్ ఆఫ్ బికమింగ్ 80, 60 became 40, what will you do? If the stock is sold, I'm saying stock is deteriorated. Purchase returns అయింది సార్, stock decreased. Possible? Possible. So, increase in stock అయితే we bought stock, therefore outflow. Remembering correct sir, logic is not right. Next, debtors decreased. What did you say? They paid money. Bad debts sir. Sales returns sir. Possible? So, ఈ logic is wrong. Remembering correct sir, debtors decreased and they paid, money came, added, correct answer వస్తుంది. Logic not right. Creditors increased. What did you say sir? You did not pay. Sir, you also know that the logic is not fitting properly. Okay. Anyway, the original logic for this, I'll tell you, easy only, you also can think of. But Since you are busy people occupied in so many other things, you would not have thought about it. Okay. Sir, this is my profit before tax, sir. Imagine I am having a profit of 1 lakh here. Here, somewhere top low opening stock will be there. I am drawing a T-shaped P&L so that you will understand what is added, what is deducted. Any shape matter is same only, Opening stock of it is 60 and 80. Shut up now. Okay. So tell me, in this 1 lakh, closing stock is included or not included? Included. And already included in 1 lakh. Similarly, 60,000 is also included and it is kind of deducted. But you must understand, closing stock is there on the credit side of P&L, but is it a cash inflow today? No, this is a non-cash item. Even this also is a non-cash item. Now you tell me what to be done, sir. If I take PBT 1 lakh, in this 1 lakh, there are two non-cash items. One closing stock included, remove it. One opening stock wrongly deducted, add it. What is the net effect? Minus 20,000. You are remembering that as I purchased stock. That is not the logic. Remembering that is okay. That will give you correct. As long as it gives correct answer, who cares? How do you remember? But this is logic for that. Like how you added back depreciation. Like how you eliminated deferred income grant allocated to P&L account credit side. You remove that because that's not cash received in the current year. Like that only. A closing stock another non-cash item, sir. That's there in your P&L. Remove it. You remove a process that is 20,000, sir. That's not because you bought goods or sold goods and all. That's not the logic. Same applies for debtors also. Debtors, creditors, everything same reason, sir. Everything will come from your P&L only. Watch out this. Suppose your PBT is again, let's say 1 lakh. You have sales of current year, let us say 5 lakhs. Sir, you must agree that in your in your profit computation, if 5 lakh sales is included, correct? Right. If 5 lakhs completely cash untunda, sir. It can be credited also. So let's split it. Cash sales 2 lakhs, sir. Credit sales balance 3 lakhs are there. Tell me, sir, how much is the non-cash component now? In this 1 lakh, how much is the non-cash component? 3 lakhs. So non-cash only, no? Correct? So I have to eliminate that? Right. No. Credit sale ka meaning is, at the time of sale, money is not collected. But during the year, money might have been collected. Correct? So credit sales, again split. Amount collected in current year, amount not yet collected by the end of the year. Whatever is not yet collected by the end of the year, what a closing debtors at 35,000 Rasi cents. The remaining amount, whatever is there, is the amount collected. Now, if I put this cash, this 3 lakhs, this cash, what is non-cash? 35,000. So, when I do cash flow statement, PBT 1 lakh this working capital adjustment stage, I will say, in this 1 lakh, 35,000 rupees non-cash item is included. Included, remove. Sir, why, sir? Because cash is not collected. Fantastic. But last year closing debtors, they might have paid cash in the current year. Sir, last year debtors how much, sir? 50,000. Did they pay? Yes. Add that. In net impact, you will get 15,000. Debtors from 50 to 35 it has fallen down. We are remembering it as debtors paid money. Technique is okay, but logic is wrong. This is logic. Same now like how I told, sales low, closing debtors is there. Like that, purchases low, closing creditors will be there. Expenses low, outstanding expenses will be there. Prepaid expenses will be there. And balance sheet low, whatever working capital items you are having, avi prima facie rooted from P&L only. Sir, debtors, where is it there, sir? Balance sheet lo there. Debtor ka creation coming from where? Sales. Where is sales? Sales, where is sales? P&L loan, sir. That means all current assets and current liabilities, whatever you see in the balance sheet, what the original amounts will be there in your P&L. In that, whatever non-cash item is there, that you have to eliminate. If you don't eliminate that, profit will not become cash. So non-operating you are removing, non-cash you are removing, working capital items కూడా non-cash. You simply show separately అంతే. Working capital adjustments అన్ని non-cash. So non-cash item, unless you remove this 35,000, you will not get how much cash is generated in the current year. This is logic for working capital. You stick to your original logic. I'm not asking you to forget that and all. But just know this. Because somebody asks you, tell that logic. Chala bagodu. So, sir, this is about cash flow from operating activities to presentation, sir. Direct, indirect. This drama of working capital adjustments will apply only if you are doing indirect method. But exam, no, sir, you don't have a choice. It's not like they give you to balance sheets and do whatever, somehow prepare cash flow and they won't ask you, sir. They will clearly cheppastad. I want direct, I want indirect. And so you got to be confident in both. Direct method and sir, anyway cash inflows, cash outflows I'm taking no, so adjustments and all will not be required for that. This is straightforward, sir. This is cash flow from operating. When it comes to the other two, which is cash flow from investing and cash flow from financing, here two methods are not there. All you have to do is inflow outflow model. That means in inflow is there, add, outflow unte minus. Now one more last point. Cash flow from operating, so many items you did, finally one number came. Cash flow from investing activities, so many items you wrote, finally one number came. Similarly, cash flow from financing activities you wrote, finally one number came. Now E number plus E number plus E number. E net amount is there, no sir? This we used to call it as, if you remember, net increase or decrease in cash and cash equivalents. You remember this slightly somewhere? Okay. To this, Japan sir, opening balance of cash and cash equivalents. The moment you add this, automatically it should match with closing balance of cash and cash equivalents. Like this you got to present, sir. Okay. Now, question. Sir, cash equivalent means what? Sir, we will study all this, but these are things which you already know. That's why I'm not taking you through the IND AS 7, rather asking you what you have already learnt. Tell me guys, cash equivalent means what? Easily convertible into cash, correct? What else? And investment in equity share, sir, listed company, easily convertible into cash, cash equivalent, within a short period, not exceeding 3 months. The condition, sir. 3 months also, it's not like, sir, I purchased investment 2 years back, sir. Maturity date is after 2 months from today. This cannot be cash equivalent. Cash equivalent ka meaning is original maturity should be 3 months or less, not remaining maturity. ఒక 5 years బాండ్ కొనేసుకుని లాస్ట్ 2 months వచ్చి ఇది క్యాష్ ఈక్వల్ అంటే ఒప్పుకోరు సార్. ఒరిజినల్ మెచ్యూరిటీయే should less than or equal to 3 months. So highly liquid, short term, not exceeding a maturity of 3 months, that too subject to insignificant risk. Risk ఉండకూడదు sir. If risk is there, we can't call it as cash. So for example, hard cash is there, sir, literal physical cash that is there in your office. Other than loss of risk of theft, is there any other thing which can change its value? No. So e cash equivalents also cash and a stage we are giving, sir. That means whatever investments you are making, e investment should have insignificant risk. And after 2 months or 15 days or 45 days or how much amount you are going to receive, that you should know. E investments are not made for earning interest income, dividend income and all. The goal of this is just savings. Sir, why are you keeping money in bank account? What is the answer for that? Current account lo money, why is it there? For interest? No. For doing transactions. Extra money is there. Some instead of holding hard cash, I'm putting it there like that. Investments, short term, highly liquid, not for investment, not for interest income and all. Because safe investments, so they park it. That we call it as cash equivalents. There's a big story on that. We'll go to that next. You tell me, issue of debentures, which activity? Issue of debentures, financing, pakka. Okay. Purchase of land, investing. Okay. Income tax paid. Sir? Pakka. You already remembered earlier, I told you profit before tax, you have to remove that. Okay. Listen. చెప్తున్నా మేడం. See, answer income tax under operating activities prima facie correct, sir. But if you are clearly able to identify that this tax is exclusively related to either investing or financing activity, then you have to group it accordingly. That means, like she said, capital gains is there. Capital gains happened, you sale of asset happened in the current year. Inflow came. On the tax also you paid in the current year only. But capital gain tax is pakka investing activity related item, no? So capital gain tax must be shown under investing activities. Similarly, dividend declare chesam sir. Dividend distribution tax is there. So dividend paid anedi oka financing activity. Mar related tax, how will you group it under operating activity? That also you have to group it under financing only. So general answer is all tax items will come under operating only. However, if it is practicable for you to identify tax exclusively relates to investing or financing activity, then you can group it accordingly. Otherwise, go and group it in operating activity. Why problems come is, sir, in income tax law, the issue is transaction happens in 1 year, tax you will be paying in some other year. For example, sir, income you earned in current year, sir, when are you paying tax? Next year, sir, when pay. So like that, I sold the asset today. Inflow is there in investing activities when today. At like 5-6 assets I sold. Next year assessment, I paid tax for that. So identification, our tax law, how much relates to e-sale of asset, and going back and working out might not be feasible. If it is possible, then of course you have to group it under investing only. If not possible, don't take too seriously, go and put it under operating activities. Okay, 3 answers you told correctly only. Tell me quick. Buyback of equity shares. Buyback of equity shares, quick. Financing. Bonus shares issued. Financing, wrong answer. Why non-cash? Why wrong answer? Non-cash. Bonus shares, cash will come. Purchase of machinery on credit. Sir, investing is liability, sir. No, non-cash. Okay, last. Sir, financing activities, so you told that all borrowings will come. Only short term, long term, both. Debentures issued ante financing activity chepparu sir. Short term borrowing, 3 months ki borrowing aymayta. Operating. See, when you say financing, I never told long term financing, short term, medium and all. Financing means raising money. Adi short term, long term, every kind of financing will be part of your financial activities. Okay. Cash is there, no hard cash. You deposit it in bank. Which activity is this? ಏನು sir? Operating. Contra entry. Are you are acting cute now. Are tell now. Cash deposited in bank. Which activity is this? Contra activity enter పిచ్చోడా. అది తప్పు నీది కాదులే, నువ్వు చెప్పు. నో యాక్టివిటీయా? అరే ఆన్సర్ సార్, ఈ ట్రాన్సాక్షన్ ఇస్ దేర్ ఆర్ నాట్ దేర్? క్యాష్ డిపాజిట్ ఇన్ బ్యాంక్ విల్ బి దేర్. విచ్ యాక్టివిటీ టెల్? నాన్ క్యాషా? ఏం మాట్లాడుతున్నారు సార్, నరాలు కట్టయిపోయింది. ఏం సార్? None of the above. Good. It's neither operating, investing or financing. Then where will I report this? Nowhere. You don't report. Sir, you deposit cash into bank. Overall cash and cash equivalents low. Change is there? No, cash decreased, but bank balance increased. Overall cash and cash equivalents, so change is not there. Such items will not be reported anywhere. So fine. You are very good with your basics. Okay. Come to materials, sir. Go to third point. Cash equivalent means investments which can be realized easily in cash in a short period from the date of investing the same. Cash equivalents are held for purpose of meeting short-term cash commitments rather than for investment or other purposes. Suppose, sir, I have to pay creditor after 1 month. Instead of holding cash, ఉంటే వాడేస్తామని చెప్పి అక్కడ షార్ట్ టర్మ్ ఇన్వెస్ట్మెంట్లో కెప్ట్ సార్. ఆఫ్టర్ 1 month ఆ ఇన్వెస్ట్మెంట్ మెచ్యూర్స్, cash, I will use it for some purpose. It is as good as storing cash somewhere rather than making an investment. Known amount of cash. ఈ పాయింట్ కా సిగ్నిఫికెన్స్ ఈస్ the investments which you want to call it as cash equivalent, they should not be carrying significant risks. Market fluctuations, all these are there, then it is not cash equivalent. Sir, Infosys company shares are highly liquid, sir. No. Why? Why not cash equivalent? Any time you can convert into cash. 3 months end, sir. 1 minute will convert. But is it subject to risk? Yes. Market risk it is facing. Sir, gold, sir. Gold, is it cash equivalent? Because many of us, we in our house and all, we buy gold and keep like that. Whenever we require, future we will sell it often. Is gold cash equivalent? Why no? Again, it's subject to heavy fluctuations in the market. Gold prices are not safe prices. So the gold is not considered. Okay, this means the cash amount that will be received on redemption should be known at the time of initial investment. It is not sufficient that instrument itself is readily convertible into cash and determinable market value. That means investment in listed equity shares, gold, these are not cash equivalents because they are subject to risk, sir. Significant risk. Next, liquidity and risk, again same point, sir. It should be highly readily convertible into known amount of cash. Very clearly is telling equity investments are excluded. This one is, fifth point is important. Bank borrowings. Sir, you borrow money from a bank, which is a nature of a loan or something like that. A pakka financing activity. But temporary overdrafts will be there. Overdraft means, I'm not talking about your book stupid overdraft. Book overdraft and sir, I issued checks by the cutoff date, accounts it became negative. Technically, the bank overdraft, according to books of accounts. Not that. I'm talking about real bank overdraft. Real bank overdraft means, you have a bank account, in that 50,000 rupees is there. You should check. When really passbook loan 50,000 is there, cash book loan 50,000 is there. You should check off, let us say, 80,000. You call the manager, sir, kindly allow it. And since you have already deposited security with the bank, you have credit limits taken from the bank, banker will say, no problem, we'll pass it on. So 50,000 positive balance now really became minus 30,000. Now, it technically became a liability. Accounting point of view, pakka liability, bank overdraft. You took money from the bank indirectly and used it for making a payment to your supplier. A pakka liability, there is no second thought on that. Accounting law, the pakka liability, financial liability, Ind AS 109 only will apply. But for the purpose of cash flow statement, such bank overdraft is treated as part of cash and cash equivalents. Why, sir? For this, separate repayment will not be there. Tomorrow I sell goods, our money will go and fall in that bank account only. Automatically a bank account will become positive. So, bank overdrafts which are part of your cash management activities, that is treated as part of cash and cash equivalents while preparing cash flow statements. Accounting law, sir, for example, sir, in your balance sheet you have cash, literal hard cash of 20 lakhs as there. Bank balance 50,000 sir. You should check of the 80,000. The moment you should check of 80,000, now it became a bank overdraft of 30,000. The moment you issued a check. When you prepare final balance sheet, no, you are not supposed to net off and all. Cash, OD, it is financial liability. Current liability is heading low. Borrowings low you will show. This cash and cash equivalents low, E2 lakhs will come. Balance sheet presentation I am telling. But while doing cash flow statement, when you say cash and cash equivalents, it will be E20 lakhs minus 30,000, 19 lakhs 70,000. This is cash equivalents. Ante accounting, financial statements of presentation, different, separate. Cash flow statement matram ee bank overdraft is treated as part of your cash and cash equivalents, provided it's a temporary bank overdraft. You take a short term loan from the bank, that is not clubbed with cash and cash equivalents. Normal bank account, if it becomes negative in the course of its usage, and again it will become positive in the course of your business only. Such bank overdrafts are treated as part of cash and cash equivalents. So, sir, we took loans are 30,000. I will show it as financing activities to inflow. No, it's not show like that. It's part of cash and cash equivalent. Here I am netting off, sir, basically, but netting off is only for the purpose of cash flow, not for the purpose of your final balance sheet or accounting and all. Is the point. Bank borrowings are generally considered to be financing activities. However, bank overdrafts may be an integral part of entities' cash management, in which case they will be included as a component of cash and cash equivalents. A characteristic of such bank arrangements is that the bank balance often fluctuates from being positive to overdrawn. Whatever example I gave you, same example, sir. Adi positive undi. One check I gave, it became negative. Tomorrow one customer will deposit some money, again it will become positive. E type of bank overdraft is as good as bank account only. Include it in your cash and cash equivalents. E point you already told me. Cash flows exclude movements between items that constitute cash and cash equivalents. That means you took cash, 5 lakhs, purchased treasury bills. Treasury bills are issued by Government of India. RBI will issue. Highly liquid, absolutely safe. And that's pakka cash equivalent. Maturity also not exceeding 90 days. So pakka cash equivalent. Now what did it do, sir? Cash reduced, one treasury bill investment purchased. But overall cash and cash equivalents, did it change? No. Since it did not change, you should not report it as investing activity anywhere. Don't report it as investing activity. Similarly, cash you took, bank low you deposited. Cash reduced, but bank increased. Cash and cash equivalents did not change. This item will not come anywhere in your cash flow statement. Adi adi meaning cash flows exclude means don't show this in cash flow statement. Exclude movements between items that constitute cash and cash equivalents, because these components are part of the cash management of an entity rather than part of its operating, investing and financing activities. Cash management includes the investment of excess cash in cash equivalents. This is exactly what we discussed. Sir, with this basic cash equivalent meaning we have understood. Now operating activities ka formal definition, sir. E standard lo, IND AS 7 how they defined is, these are cash flows from operating activities that are primarily derived from the principal revenue producing activities. Therefore, they are in general result of the transactions and events that enter into the determination of profit or loss. So all PRL items are not operating in general because interest expense is there. That is considered as part of determining PRL. Will you go, is it an operating item? No, no. So in general he is telling. Exceptions will be there. Examples he gave, examples are already covered, sir. Don't go and read that again. Go to this one. Sir, in your P&L account, gain on sale of machinery is there. Are operating or non-operating? Gain on sale of machinery, non-operating. Why non-operating? A gain ochindante, a gain is part of your sale proceeds. Sale of machinery. Sale of machinery, which activity? Investing activity. So when you are working out cash flow from operating activities using indirect method, e gain on sale is something you have to remove it. This second point is there, no sir? This newly, ante IFRS lo, this newly a point is addressed. This AS7 lo also it is not there. Sorry, your AS3 lo not there. IND AS 7 lo there, but unfortunately we don't have any question on this, so too much highlighting also not required. It's just that, sir, imagine a case, sir. Example you will only tell me, I'll tell you only the case. I buy some assets. These assets, after I buying, I will rent it out. So these assets people are using, they are paying me rents. This asset is daily somebody is using and he give it back to me. This asset also someday I will sell it off. That means I buy assets, give it on rent. Assets I also sell it also, once they are little old and all. Type of activity where you are buying assets, earning rental incomes, again you are selling that asset only. Standard says the entirely to be treated as operating activity. That means rental income what I receive, operating. Purchase of this asset, operating cash flow. Sale of this asset, operating cash flow. Normally when I say I buy an asset, which activity? Investing. When I sell an asset, investing. Rental income, not like that. Suppose you have a land and building, sir, అది రెంట్కి ఇచ్చారు సార్, అది ఇన్వెస్ట్మెంట్ ఇన్కమ్ నో సార్, అది ఇన్వెస్టింగ్ యాక్టివిటీ. బట్ లుక్ ఎట్ దిస్ కేస్, I bought an asset, I give it on rent. Again, the asset, I sell it in the ordinary course of my business only. In that case, buying assets, selling assets, earning rental, all this is part of my core business. Therefore, when you buy an asset, operating activity lo outflow. When you sell an asset, operating activity lo inflow. When you earn rental income, ade nee business, how will you call it as investing activity? Adi operating cash flow. At the point address. This practically who will do? Practically who will do this? Very good. All these vehicles is there, na? They business ఉంటుంది sir. Suppose you have 10 lakh rupees with you. You can buy some 4 cars with that second hand loan. These 4 cars, what you do is, you give it to these people who are working for Uber, Ola and all. They will drive your car only. They will get their money. They will pay you your rent. Now, after 6 months, 8 months, 1 year, when you feel that a car has traveled too much, then again, a car you will sell it off. Again, new car you buy. Now you tell me, sir, buying car, selling car is part of my ordinary activities? Yes. Earning rental income also is part of my ordinary activities. Technically, if you observe in one way, purchase of asset, sale of asset is investing activity. But in particular case, buying assets, selling assets, earning rental income, all these are my main core business. So you have to treat everything as operating activities. Please read that. Cash payments to manufacture or acquire into purchase. Assets held for rental to others and subsequently held for sale are cash flows from operating activities. The cash receipts from rents and subsequent sale of such assets are also cash flows from operating activities. So simply a car example, if you remember, buy car, sell car, rent car, this is totally operating. Activity and operating. Next, coming to investing activities. Investing activities, what is there, sir? Future low returns will come on a anticipation. Today, your money you go and invest somewhere. Let it be plant, let it be building, let it be a vehicle, let it be any investment in shares, anything. Any investment ka goal is what, sir? I will be getting more than what I have invested. No, so all such resource investments are called as investing activities. E process lo we may buy, we may sell also. So directly go to the example, sir. Our theory question means our formal definition. What will you do? Cash receipt from sale of PPE, intangibles and other long-term assets. Outflow lo ikkada cash receipt from sale అయిపోయింది కదా sir. Here purchase. Same example, opposite. ఇది inflow, అది outflow. Cash receipt from sale of equity or debt instrument of other entities and interest in joint ventures means sale of investment, simply put. And this side it is nothing but purchase of equity or debt investments. Brackets or something is there, see, other than receipts or payments for those instruments considered to be cash equivalents. Cash equivalent, for example, you purchase a treasury bill, sir. You will go and show it as investing activity. No, that's part of cash. Adi technically adi kuda purchase of investment, but that is not part of your investing activities because that is belonging to cash and cash equivalent group. That is one exception. Another exception is also there. And those held for dealing or trading purposes. That means buying and selling investments is your core business. For that fellow, investment buying will not become investing activity, that becomes a operating activity, obviously. So are two exceptions there on both sides too. Next, cash received from repayment of advances and loans made to other parties. And once upon a time I gave loan to somebody, loan given. Today that fellow is repaying the loan. When I gave loan, investing activity. When I recover the loan, also investing activity, both sides. Again, brackets exception. What is this? Loan given, loan taken will not be investing activity if you are a bank. And operating activity because it's your core business, no sir. Exception. If you are a financial institution, then the classification will be treated as operating, not as investing. Last point is an interesting one. Sir, you entered into derivative contracts, sir. అంటే ఒక ఆప్షన్స్, ఫ్యూచర్స్, స్వాప్స్, యూ ఎంటర్ సమ్వేర్. ఈ కాంట్రాక్ట్స్ you are getting some cash inflow or you might be paying some cash outflows. Normally, derivative transactions are normally treated as investing only, unless clearly you have held it for the purpose of dealing or trading purposes. Dealing or trading intention is entering into derivative products and all is part of your normal business. In that case, it will be a operating obviously, or the receipts or payments are directly classified as financing activities. Example, suppose you have a loan. A loan, low interest rate is payable on variable rate basis. So in that by default an inbuilt derivative is there. So a loan interest whatever is there are fluctuating a derivative cash flow indirectly. But that cannot be treated as an investing activity or investment activity, outflow or inflow, because it's related to a financing activity. So exclusively unless it relates to financing activity or operating activity, general rule is any product of derivative is an investing activity. Next, in this one more twist is there. Sir, imagine I have a long-term loan. E loan I took from a foreign bank. So the foreign currency loan, sir, borrowing. Tell me which activity it is? Borrowing, financing activity. I have one risk. What is the risk is dollar rate may increase. So I did not keep quiet. What I did is I entered into currency futures. Dollar futures low, dollar rate will increase on my estimation. So I took a long position today and I waited. Meantime, maturity date came. I squared up, or I waited till the maturity date, gain or loss came. Let's say I got a loss. But futures contract loss is pay chesam. Which activity it is? Normally speaking, any derivative product you have entered, that should be an investing activity. But here, e futures contract you entered for the purpose of hedging your loan. Loan is which activity? Financing activity. Therefore, e derivative cash flows also will be treated as financing activity. Hedging purpose kehte, for what purpose you hedged? A purpose you have to see which classification it gets. Here for which purpose did you go? Hedging a loan payable. Same story. If you try to hedge a loan receivable, suppose you gave a loan, foreign currency loan you gave. Another risk undi, foreign currency risk. To hedge that you entered into a derivative product. Now loan given which activity? Investing. So therefore a derivative product also naturally will be investing like that. So depending on the activity, derivative classification you have to take if they are used for hedging purposes. If they are not used for hedging purposes, then straight go and book it under investing activity. Finally, financing activities. Financing activities mainly are cash flows related to raising of funds and redemption of funds. In this there is no big adjustment, sir. Now what we do is go to questions, sir. 1 or 2, 3 small questions are there. Special cases majorly are covered, sir. 1 or 2 are there, that's it. Page number 12. Go to question number 1. See, there is a table given now. You have to see that and tell whether they are cash equivalents or not. That's all. Yes or no. First one. Fixed deposit with SBI. At the 12% interest, 3 years maturity it seems. So once 3 years maturity, you are out of the game. No, I want only 3 months or less. Fixed deposit with HDFC, original term is 2 years, but due for maturity on 30th June. Okay, today you are standing on 31st March, sir. April, May, June. Within 3 months, money will come back to you. Is it cash equivalent? Huh? No, why? Cash equivalent ki remaining maturity, sir. Original maturity should not exceed 3 months. Here original maturity is 2 years. Is wrong. Not cash equivalent. Redeemable preference shares in ABC Limited. Acquired on 29th January and redemption is due on 30th April. What do you feel? Redeemable preference share. I bought, sir, and from the date of my buying, it gets converted into cash within the next 90 days and risk is also insignificant. Why? This is not equity shares, preference share. That too nearing redemption. What will happen after 3 months? Whatever amount I will get, I know already, I amount only I will get within 3 months only. Pakka cash equivalent. Cash balance at various banks. Obviously, cash equivalent. He says all branches of all banks in India. India lo every bank lo Every branch is having cash, it seems. Okay. Cash balances at various banks, all international branches of Indian banks. Cash equivalent. Sir, it doesn't matter whether it is in India, outside India, no. So he's unnecessarily trying there. Anyway, cash balances at various banks, branches of foreign banks outside India, doesn't matter, it's still cash. Bank OD of SBI Fort branch. It's a temporary overdraft which is payable on demand. Temporary overdraft, just now we discussed, no sir, this is definitely part of your cash and cash equivalents. Treasury bills. Treasury bills is, there can't be any safe investment than that. Only thing is you are not allowed to buy it as an individual. Includes part of cash and cash equivalent. Next. Second question. Okay, from the following transactions, identify which transactions will be qualified for the calculation of operating cash flows if company is into the business of trading of mobile phones. Okay, receipt from sale of mobile phones, is it operating or not? You have to tell only that. Yes. Next, purchase of mobile phones from various companies. Yes. Employee expenses paid. Yes. Advertisement expenses. Yes. Credit sales. Credit sales is not a cash activity, so only to the extent of receipt of debtors you must consider, not credit sale as such. Miscellaneous charges received from customers for repair of mobiles. Repair of mobile is also part of your activities. Loss due to decrease in the market value of closing stock of old mobile phones. Is inventory loss, sir. Cost or NRV, whichever is lower, is not NRV comes, no. Upon loss you will book in P&L account. He is talking about that loss. Non-cash, good, it will not come. Payment to suppliers of mobile phones, of course. Depreciation, non-cash. Interest paid on cash credit facility to the bank. Interest paid on bank loan is financing activity. Profit on sale of old computers and printers in exchange for new laptop and printer. You are doing computer business, huh? Mobile. Computer is pakka PPE for you, pakka investing activity. If that is exchange pure, it is non-cash also. It will not come anywhere. Advance received from customers, definitely cash operating activity. Sales tax and excess duties paid, operating activity. Next, third one. From the following transactions taken from a private sector bank operating in India, identify the transactions that will be classified as operating and which would be classified as investing. Understand the main points, sir. It bank. So keep that in your mind and do. Interest received on loans. Investing, huh? Operating. Interest paid on deposit. Deposits accepted. Operating. Loans given. Loans repaid. Deposits repaid. Operating. Commission received. Operating. See, normally bank commissions means banks will give bills, bank guarantees, letter of credits and all. On that they charge commissions. Our commissions are part of their regular business activity, operating. Lease rents paid for various branches. Rentals and is loosely talking about the operating. But actually IND AS 116 lo, once you capitalize it as ROA asset and lease liability, it again a lease liability payment again they have to account it, sir. But e question lo they treated it as operating activity only here. But for that actually IND AS 116 they did not consider it here. Plainly they answered it, that's okay, leave it. Service tax paid, operating. Furniture purchased, investing activity. Implementation of upgraded banking software, investing activity. Purchase of shares in subsidiary. Purchase of shares, the subsidiary or non-subsidiary doesn't matter right now, classification at least, investing activity. New cars purchased from Honda dealer in upper investment, sir, in exchange of old cars, non-cash, unless something is exchanged cash. Suppose some extra cash I paid, that's investing activity. PF paid for employees, ante employer contribution is there, no, adi pakka operating. Issued ESOPs, non-cash, ESOPs issued, non-cash. You are slowly becoming pro, sir, pro. చెప్తా మీ పని తర్వాత ఇవన్నీ స్మాల్ క్వశ్చన్స్. You will do consolidated cash flow statement. From the following transactions taken from a parent company having multiple businesses and multiple segments, identify which transactions will be classified as operating, investing, financing. Sir, ఈ table question as it is can come. You think that they are too small for our range, exam లో will not come. అక్కడ అట్లాంటి ఫీలింగ్ ఏమి ఉండదు సార్. క్యాజువల్గా ఇట్లా తీసి అట్లా పడేస్తాడు. మీరు కరెక్ట్గా ఈ క్వశ్చన్ వదిలేసుకెళ్తారు, ఎట్లా అని రాదు కదా అని వచ్చేస్తుంది. చేసేస్తారా? ఓకే. ఇష్యూడ్ ప్రిఫరెన్స్ షేర్స్. ఇష్యూ ఆఫ్ ప్రిఫరెన్స్ షేర్స్ విచ్ యాక్టివిటీ? ఫినాన్సింగ్. ఓకే. పర్చేజ్ ఆఫ్ 100% సబ్సిడరీ. ఫినాన్సింగా? ఇన్వెస్టింగ్. ఓకే. డివిడెండ్ రిసీవ్డ్ ఫ్రమ్ షేర్స్ ఆఫ్ సబ్సిడరీస్. Dividend received from shares, investment. Dividend received from other companies, investing. Bonus shares, non-cash. Purchase license for manufacturing of special drugs. License ante intangible asset babu. You purchase that, it is investing activity. Royalty received from goods patented by the company. Royalty received. Sir, royalty received, you can take it as operating activity or investing activity as per your IPCC study material, but here I think they are treating it as investing activity. So royalty is coming because of the patent, and patent is basically an intangible asset. So related income kabatti idi investing activity. Let's see what's the answer. They gave it as operating. Market important, sir. The example. Sir, why they treat it as operating activity? I told you the logic. The logic for this, why they treat it as operating activity is, sir, listen. Patent is something which is developed because of our business activities. Imagine I have a brand name. This brand name I give it to you. So what are you doing, sir? You are selling products with my brand name only. A profit belongs to you only, but because you are using my business card trade name, you pay me some amount for that. So this amount, whatever I am earning, is it not? Even though it's a kind of a rental income, but it is coming because of my core business activities, my brand of selling products only. So therefore, it is included as part of operating activities. It's always a debatable point, sir. IPCC undi. Royalty in some answers, IC only, they took it as operating. In some cases, they took it as investing. But yeah, operating is not a wrong answer also. It's in fact, there is a lot of justification for this as well. Next, rent received from let out of the building. And he says bracket, so letting out is not the main business. If letting out is your main business, it becomes your operating. But now that otherwise it is an investment activity. Next, interest received from the advances given. Advance is given into loan given with the interest received. Investing activity. Dividend paid. Financing activities. Interest paid on security deposit. Financing activity. Next, purchase goodwill. Purchased goodwill. When will goodwill come? When you buy a business. Purchase of business is obviously investing activity, so goodwill also comes there only. Next, acquired the assets of a company by issue of equity shares. Sure, huh? Okay. Interim dividends paid. Financing activities. Next, dissolved the 100% subsidiary and received the amount in final settlement. Purchase of subsidiary investment and sale of subsidiary also should be investing. In this later on when we go, more detailed analysis, consolidation of whatever concepts we have learned, that and this cash flow statement, mixed versions untai sir, consolidation. So very interesting sums. Are we important mostly than all this, but still. Okay, last question. Or what, sir? One second. What happened? I'll check it now, one second. Once go to page number. No, I have to, before that I have to tell you something. 6 point. Go to 7th point once. Sir, 2-3 small points will cover off, sir. Sir, 7th point heading is reporting cash flows from operating activities. This, as we discussed already, operating activities, two methods are there, direct and indirect method. So he is explaining how to do direct method, how to do indirect method. Normally indirect method we know. First go and read indirect method, last point, sir. Under indirect method, the net cash flow from operating activities is to be determined by adjusting profit or loss. Take profit and from that work out cash flow from operating activities. What all adjustments you have to give? Changes during the period of inventories, operating receivables and payables. This is nothing but your working capital adjustments, and non-cash items, and then all other items for which cash effects are either investing or financing. This is nothing but indirectly non-operating. So non-cash, non-operating, working capital adjustments, E3 if you do, your profit before tax will become cash flow from operating activities. This is indirect method. Come to direct method lo, what presentation is expecting. Normally what we do is, every inflow you add, every outflow you minus. This is a style of presentation. He says you can do that. That is A bit. Under direct method, information about major classes of gross cash receipts or gross cash payments may be obtained from the accounting records of the company. Under directly, accounts cash book you open, all inflows add up, all my outflows show it as a deduction. Group it into appropriate classes and show receipt from debtors. Suppose 20 debtors paid money, add up everything, receipt from debtor, no single amount you show. Like that you have to show. This is one style. There is another style. What is that is? By adjusting sales, cost of sales and other items in the statement of profit and loss for changes in the period in inventories, operating receivables and payables and other non-cash items and other items for which cash effects are investing or financing activities. You observe carefully, this type of presentation as IPCC lo it was not there. It is a new presentation. What he is expecting is, carefully understand sir, even easy points say, but if you strongly feel that you already know, then you will not understand. This is indirect method I am writing, just watch. Indirect method lo, we take profit as the starting point. To this we make adjustments of non-cash, non-operating and working capital. This is indirect method. What he is saying is, direct method, normally inflows, outflows you can follow. You can also follow this method. What he says is, take the total sales. Take the cost of sales. Take cost of goods sold expenses. Tell me sir, sales and a number, is it total inflow na? Sales and a number inflow na? Cost of sales and outflow na? No. So for this make adjustments. What adjustments? Again away adjustments. Non-cash, non-operating, working capital adjustments. Get your cash flow from operating. Ante indirect method lo whatever adjustments you did, now also same adjustments you are doing. Instead of writing cash receipt from debtors, cash sales, cash purchases, payment made to suppliers, rent paid, like that, instead of writing like that, you can give this presentation also. Sir, this and this both are same. No sir, not same. Here your starting point is bottom line called as profit. Here your starting point is top line called as sales. How can it be same? It cannot be same. But our sales are non-cash items ఉన్నాయి, cost of sales are non-cash items ఉన్నాయి. Again ఈ 3 adjustments ఇక్కడ కూడా చేయాలి సార్, non-cash, non-operating and working capital items. So this is another presentation which is allowed now. Okay, next. Investing, financing as a discussion is not there sir. Happily inflow, outflow model we present, అందుకని small only one line లో there out. 9th one we will see later, 9th point. Okay, 9th point only will cover, 10th point we will see tomorrow. Last point sir. Sir, in cash flow statement, unless a standard permits you, you are not supposed to net off any inflow or outflow. Until there is an inflow in your business, same time there is an outflow also. Sorry, both I will net off, single income I will show, not allowed. Inflow separately you have to disclose, outflow separately you have to disclose. But obviously, this rule ki exceptions are there. Our exception is important. First exception is, cash flows from operating, investing and financing activities may be reported on net basis. If in two cases, A bit, B bit. A bit in a simple way, sir, you received cash and you paid cash also. But this cash you received not on your behalf, you paid also not on your behalf. Example, you are doing an agency business, sir. Agency business, no, customer will give you money. This money I will pay it to somebody. I am kind of a broker here between the customer and the some original service provider. But I will only receive money, I will only pay money. But inflow is not my inflow, outflow not my outflow. I am a commission agent there. Tell me sir, is it correct from my cash flow statement point of view to show gross inflows and gross outflows? It is not correct. therefore net it off. Imagine, I am a ticket selling agency, airplane tickets I sell. You pay me money. Immediately in front of you, you will book ticket. Money is going from my bank account. But I collected money from you, cash, somehow I collected. Tell me, sir, I purchased a ticket and I also sold ticket to you. Sale of ticket, purchase of ticket, why will I record in my book, sir? I am an agent here. I did not sell the ticket to you. I am only a facilitator here. I am an agent. So whatever money I received is not my money. Whatever money I paid is also not my money. How can I show it as inflow, outflow separately? Net off చేసి నీ కమిషన్ ఏదో చూపించుకోవాలి సార్. సో ఆ కేసెస్ అన్ని ఏబిట్లో ఇవ్వడు. క్యాష్ రిసీట్స్ అండ్ పేమెంట్స్ ఆన్ బిహాఫ్ ఆఫ్ కస్టమర్స్ వెన్ క్యాష్ ఫ్లోస్ రిఫ్లెక్ట్ ద యాక్టివిటీస్ ఆఫ్ ద కస్టమర్ రాదర్ దాన్ దోస్ ఆఫ్ ద ఎంటిటీ. ఈ ఎగ్జాంపుల్స్ అన్ని. యాక్సెప్టెన్స్ అండ్ రీపేమెంట్ ఆఫ్ డిమాండ్ డిపాజిట్స్ ఆఫ్ ద బ్యాంక్. డిమాండ్ డిపాజిట్ అంటే కరెంట్ అకౌంట్ బ్యాలెన్స్ సార్. ఏ కస్టమర్ గేవ్ 5 lakh rupees. Immediately he took away 2 lakh rupees. So, a year low, like this, how many transactions will be there, sir? Hundreds of transactions will be there. So, overall, what you have to do is, overall, the entire current year low, net bank received, bank paid. That alone, if you report, that's enough. Every inflow, every outflow, if bank starts reporting, they have to print telephone directory. So, net off, sir. Demand deposits case, so net off. Next, funds held for customers by an investment entity. Like, suppose, sir, I have a mutual fund investment. There is a fund manager. Let's say I gave him 25 lakhs to manage. The fellow managed. He still has some cash, 2 lakh rupees. He 2 lakh rupees he did not invest. He is looking for an opportunity to invest. 2 lakhs is there. If I want, I can withdraw. So I have withdrawn 50,000. Again, I gave 80,000. Again, I withdraw 1 lakh. Again, I put 20,000. E money, even though it is there with him, I am taking, again I am paying, again I am taking, again I am paying. These are transactions between a customer and a fund manager relating to a money belonging to a customer. It's just like you withdraw money from your current account, again deposit there. It's exactly the same nature. So that also is treated as example. Third one is example what I told you. Rents collected on behalf of and paid over to the owners of the property. Normally, sir, let's say you settled in US. In India, you are having 2 independent properties, bungalows you are having. You have given it on rent. Will you appoint some person to look after the property or not? Or will you leave it on tenant, son? If you leave it on tenant, that fellow will occupy that and he will sell off also. So you will definitely hire some fellow or appoint one fellow who will take care of the property. Monthly goes, collect rents and give it to you. This fellow who is collecting rent, will he feel that I earned rental income and he will feel? And I paid expense and he will feel? No, he is only an agent. So rent received minus whatever you paid. Net you show. And net is nothing but your commission. So a commission alone you have to show. In cases of netting is allowed because you are doing transactions but not on your behalf, on behalf of somebody else. Second, cash receipts and payments for items in which the turnover is quick, amounts are large and maturities are short. That means transactions here you are not doing on behalf of customers and all. It's pakka transactions between you and outside party only. But there are many transactions like this. Quickly they are getting closed. Imagine, sir, you are a bank who is giving credit card to the customer. The moment you give credit card, what will this fellow do, sir? He will buy everything. He will swipe everywhere. Then whatever amount you have paid to somebody on behalf of your customer, how money will come back to you or not? Will come back when? Within 30 days or 40 days. Definitely it's going to come back. Like that, how many transactions will be there in a year? Thousands of transactions will be there. I give 30,000. Within 15 days, again, the money will come back. Or within 40 days, the money will come back. So I gave, I received. I gave, I received. Most of the cases, interest will be zero. Why? People will pay off the amount within the due period only. Once you cross the due period, then bank has got a right to charge interest. Now imagine, sir, I'm a bank. You have swiped your credit card in some mall. As far as mall is concerned, they received payment. From whom? I paid. But you have to pay to me. When after 40 days, you have to pay me. You paid. So from my point of view, observe. Today, I paid some 1 lakh rupees to somebody. After 1 month, you are paying that 1 lakh back to me. 1 rupee extra I want to receive. I will not account it as loan given 1 lakh, loan recovered 1 lakh, and I will not account. I will do the net transaction. Net is how much here? 0. I will not do this anything. Suppose I paid 1 lakh. You did not pay me money in the due date. So you paid me 1 lakh 10,000. Now if I net out, what will happen? 10,000 interest is coming. 10,000 interest ka accounting you will do. Operating income. So are the examples. Cash receipts and payments for items in which turnover is cooked. Turnover into not sales. Turnover means, in context of turnover means time taken to close up the transaction. I gave loan to you, credit card basis. Within 40 days you paid me. Like this, many transactions are there and many transactions got closed also. Turnover means time taken to close it. Adi turnover ante. Amounts are large and maturities are short. Principal amount relating to credit card customers, purchase and sale of investments, other short-term borrowings, for example, which have a maturity period of 3 months or less. So, EV example, sir. Second one. It is easy only, sir. Cash flows arising from each of the following activities of a financial institution may be reported on net basis. Cash receipts and payments for acceptance and repayment of deposits with fixed maturity dates. Total how much FDs did we receive? Total how many FDs we paid? Net FDs received or net FDs paid you can report. Fixed maturity date and fixed deposit. Next. Placement of deposits with and withdrawal of deposits from other financial institutions. Sir, why will one bank make investment in another bank, sir? That you should see banking chapter. You have this CRR, SLR, where you can invest compulsorily, some amount has to go to some other financial institution. Safe investments are there. No, for that purpose you invest. Cash advances and loans made to customer and repayment of those advances and loans. This is simply example of, again, the same credit card payments and recoveries. All this you can net off and present. Okay, sir, that's all for this session. We have foreign currency cash flows, interest and dividends, taxes, and we have got a lot of sums. We'll see in the next session, sir. Thank you.